Welcome to TradeTheMBI.com. This is John. This report is for the 5th. And, well, I had my fever peak out, just like the market seemed to have peaked out the other day. I think I got up to 102, back down again, and the market seemed to have gotten to 105 degrees and has trailed back a little bit. We can see it in the dropping shakeout from the other day, and that persists a little bit here with my intermittent pauses for coughing, but we can still see solid DOC readings here with cyan below red. That is not the end of the world. It just means most likely a consolidation at this particular point, unless we see some kind of major DOC spread, which would be the cyan moving above red. Not there yet. And as well, you already have a reset of short-term buyers here for the steel, and this would be the time where new fund money is just about to arrive. So we're already overbought, have been for the last few days. So not surprising where we're at this particular point. NQ obviously suffering a little bit stronger. It's been a little overdone. Started off with the big move, was right there at the same time DOC spread. So it's trailing just a little bit, and we've had quite a move. Euro still staying elevated. That definitely supports the status quo of the market. So as long as that's in place where it is, it's pretty strong. Bonds, of course, flight to safety as people see that, hey, maybe the best part of the news on tax relief, blah, 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 is in. And so they scale back just a little bit. It doesn't seem that problematic. There's still, again, nowhere else for you to put your money, particularly if the Fed is going to talk about raising rates. If you start to see those numbers come in as they're expecting with high to mid-level threes for the end of quarter GDP, do they have any other choice but to raise rates? That's really the question. Keeping them low, despite, well, their version of inflation versus what's really happening are two different things. I don't necessarily see it as strong yet because I think there's enough slack in the labor supply that it's going to keep things at a reasonable level, and we're not seeing a huge, massive increase in oil prices. So those factors help maintain the lower price, despite the fact that we've switched from no growth to higher growth. So doesn't mean the Fed has to raise just yet. They could afford to be behind the curve. It's just a question of, do they want to stick it to Trump? Is really what it comes down to. And GLD, so again, gold's having that problem, like we talked about. The short-term buyers coming back into it, but nothing else beyond that. And like I said, I think some of this is a little cryptocurrency situation has diverted some attention from it. Plus, again, it's an indication we're not seeing the actual net effect of inflationary pressures at this particular point. So let's look at what happened for the day, and it was shrink it all the way. We had the big gap up. I suggested that we were likely to see fill when we got to the 50% mark of the backfill right here, which was not bad. We kind of trailed across. That was the time where we should have broken back up to the highs. When we didn't have that happen, we ended up with nothing but flatness, and then we ended up with the rising azure and gold, and those are happening and you're not getting new highs, you've got a problem. Because at that point, as soon as it fades the other direction, it's going to be a significant downswipe. And that's exactly what took place going down there. And then we ended up, well, backfilling it all the way, 100%, which was right back up here, which is all we are right now. So pretty much just effectively have negated the whole gap up for futures and returned right back to where we were. So nothing has changed. But it was a good hike. And that's the beauty of those kind of gaps, because then you can capture shorts that were stuck there, and then there were no new buyers, so things faded back, and now we're just back to the status quo. Which is not a problem. But you look at that daily, and it's not suggesting that we should turn around and break into anything strong. If we see steels move up a little bit higher, then maybe overshoot, but we're a bit overbought in this particular setup over here. But what's been nice is the ATR starting to move back up into a much more profitable range up in the 20s, which means those are pretty decent moves. And so as we get into this holiday crush, coming off these buy signals from all the way back over here, keep going back all the way down. Not bad. Not bad at all. So we'll continue to go with what is, and at this particular point, we've got a lot of weakness right now on a short-term basis. could even meet 50% right there, even off of the little buy configuration that developed. And see, shake up, didn't even get to zero. And when that happens, usually you're gonna come back down. We'll make a little less shallow dip, and that will be the buy setup coming forward. Hasn't happened just yet, but it's early. As always though, trade well. We'll talk to you later.